Hi everyone, welcome back. Today I'll be doing my honest review on one of the platforms that I've been using to invest in real estate. The platform is called Fundrise and I have a pretty good experience with it. So I'll walk you through it. I will show you how to start, how to invest, what plans do they have, what fees do they have, what they tell you and don't tell you in the beginning. So if you haven't yet, please subscribe, hit that button down below for more investing and finance related videos. So let's look at my Fundrise platform so I can show you everything. Alright, so welcome to my screen. Before we start, I want you to know that I'm not sponsored by this company. I'm not trying to sell you anything. I'm just sharing with you my opinion about Fundrise, about this company, because I believe it's a great way to start investing in real estate with them. So in today's video, I will share with you their requirements, what you need to do and what you need to have to start investing with them, what plans do they have and how do they invest and how do they differ, their annual fees, what you need to do in order to take out the money from the platform, their historical performance, and my experience. So I will try to keep it short, so let's get into it. So for the minimum requirements, you can invest with as little as $500. I know it might seem a lot for some people, but it wouldn't really make sense to invest in real estate with less than that, because you wouldn't really see any return on it, or it would be really small. It's a US based company, so you can only invest if you are a US resident or if you have a social security or ITIN. So as long as you have a US tax ID number, you can invest. Fundrise, they have three plans that they let you choose from. So first is supplemental income over here, second one is balanced investing, and third one is long-term growth. How do they differ? So the first one, supplemental income, it focuses on dividend payout. So as you can see, 3/4 of your income will come out of dividends and 1/4 will be coming out of the appreciation. So you will see steady growth like this, but it won't really be gradually going up. It will be steadily going up. Then on the other side, you can choose long-term growth, which won't pay much in the beginning, but overall it will start curving up. So this focuses on less on a dividend payout and more on a appreciation. What I was investing with was I was doing the balanced investing, and that's just because I wasn't really sure how long I want to keep my money in. So I felt like in a shorter amount of time, it's better for me to go with this, so I can see more of a payout in the beginning, but also get some of the appreciation eventually. Their fees, so they have annual fees, which come down to 1% a year, which is really good compared to other traditional investments and other websites. So I feel like 1% for what they offer is really good. You can ask them any questions you have about your investments. They have a great platform that I will go over with you. I really think it's worth it. Next thing, and that's I guess the most important thing, that's the cost associated with taking out the money. So it might seem harsh, but let me explain. So if you invest and you invest for less than 5 years, there will be certain percentage taking out of the money that you take out. And that's just because this is not a brokerage company. They don't try to buy and sell right away. This is long-term growth investment company. So they want you to invest your money for longer amount of time so they can actually make your money grow. imagine you are the company, you are buying a real estate, and then your investors say, no, we want our money back. I mean, you can't really say real estate right away and then give the money back to your investors, because you don't want that. That's not how you make money. So for them, that kind of helps them to keep larger sum of the money on their end, so they can have that money and they can invest it. So if you take out your money before 3 years, you pay 3%. You pay 3% deduction on it. If it's between 3 to 4 years, 2%, 4 to 5 years, 1%. If you take out money before 3 months, so you open up account, you invest your money, you don't like the platform, you take it out, you can take out everything and they will give you all the money that you put in. So you have 3 months to try it out. Let's look at their, one more thing. In their policy, and that's not something that they will really disclose in the beginning, is that if there is a huge market crash, or in this case, how the corona hit market in first half of 2020, then they won't allow you to take any money out. It, again, might seem like a disadvantage, but it actually protects your assets, because if everybody would want to take out their money when the market crashes, they would have to sell their real estate maybe even cheaper than what they bought it for, so you wouldn't be making any money on it. So this, it just protects your assets, and they will just ride the crash out, they will ride it out, and once they are back where they were before the market crashed, then you can take out your money. So in some cases, it might take longer for you to take your money out. So if you decide to go with Fundrise and you want to invest with them, make sure that it's a long-term investment and you don't really need the money back right away, because in some cases you might have to wait. Let's look at their historical performance. So this is, I mean, it's just amazing. So they started, this graph shows how it would be if you would start in February 2016, you would invest $10,000. This is how it would grow up until 21. So end of 2020 or 21, you would have 18,000, 17, 18,000. So that's 80% gain on your investments in, what is it, less than 5 years. I mean, that's just amazing. But what fascinates me about this company is not how they performed in a bull market. I mean, you would really have to be doing something wrong if you can't perform well in a bull market. But I think what makes companies stand out is how they perform during a bearish market. So let's look at the first half of 2020. So first half 2020, stock market was down 5%. Public REITs were down 15%. If you don't know what that is, for a company to qualify as a REIT, the company must have most of their assets connected to the real estate, and they have to distribute 90% of their taxable income to shareholders in form of dividends. So those are public trading companies that pretty much do the same as a fundraise, but they are publicly traded. They don't have any restriction on taking out the money, keeping the money in there. You can just trade it daily, or you can keep it there longer. A great example of that is Realty Income. Their ticker is O. They pay out 4.5% yearly, but just, heads up, they pay out dividends monthly, which is really nice to see. So actually in my portfolio, where I buy stocks, I actually own some of this as well. So back to first half 2020, you can see that everybody was underperforming market, but Fundrise was actually making money even though everything was going down. So I think that's what makes great company to stand out even more, is how they perform in a bearish market. So in my opinion, Fundrise is a really, really good company to invest with, as long as you don't need your money back right away. So for long-term investors, great way to create passive income. So let me show you my account. So I actually started with them in February 2020. So actually when the corona hit, that's when I started with them. And even though the corona hit and everything, I was actually making money. So slowly it was going up, even though the market was so bad at that time. So I was with them for 6-7 months, and I made, $28.61. In September 28th, I actually decided to take out the money and put it in the stock market, because I felt like I can make more money in the stock market at that time. And it actually paid off because I bought airlines with it, but I'll make another video about it. So overall, I actually lost $2, and that's just because I was there 6 to 7 months. So I had to pay out 3% out of all my gains. So that's why overall I lost $2 on it. But I really like that company, so I might actually come back. Let's say the corona comes back, corona's gonna be good or gone, and then I'll have some money aside. I will probably start investing with Fundrise again. So that brings us to the end. Thank you guys for watching. I hope you enjoyed it. Let me know if you have any questions. If you haven't, please subscribe. Hit the button down below.